It's been a down day for a lot of names in North American trading. Restaurant Brands, though, saw its earnings and revenue top estimates. The shares are higher right now. A boost in sales and several of the key core parts of the Restaurant Brands business, which includes obviously the Burger King franchise and here in Canada and globally a business like Tim Hortons as well. Let's bring in Patrick Doyle. He's the executive chair of Restaurant Brands. Patrick, it's nice to have you back with us. And the last time we spoke with you, you were talking about one of your key goals coming into the company, accelerating growth. Do you feel like you're achieving what you set out to achieve?
Yeah, thanks, John. Yeah, we sure are. I mean, system sales were up almost 15% year over year. Tim Hortons in Canada was an absolute standout. I mean, that's 40% of our cash flow, of our profits come from Tim's, and they had comps of 15.5%. So, we had a terrific quarter. Our international business was up double digits, and we made really good progress in the other businesses as well, including Burger King in the U.S. and Popeyes and Firehouse. Everybody was up, and we feel very good about the progress we made in the quarter.
So you've talked a lot about alignment with franchisees, which are obviously a key part of the business. They are stakeholders too, whether we're talking about Burger King, Tim Hortons, or other parts of the empire. And look, it's no secret there can be tensions with some franchisees. We've seen that. You talked on the conference call today about wanting to work with franchisees who believe in the vision. Can you elaborate on that, please?
Well, absolutely. I mean, look, at the end of the day, the franchisees own the vast majority of our restaurants. They're the face of the brands and of the restaurants to their customers. And so it's our job to provide them with a great economic opportunity to operate our restaurants. It's their job to be in those restaurants, giving great service, making beautiful food, having terrific people work for them in those restaurants. And so it's a partnership. Our job is to improve their economics on average. Their job is to be terrific, engaged operators.
Hi, Patrick. It's Alex in New York. How's it going for the franchisees when it comes to inflation? You got food inflation and you have labor costs. Can you give me some insight as to how they're managing those things?
Yeah, so everybody has had to take some price really across the industry and certainly in our brands. And so we've done that, although you're seeing that moderate now. So you're still seeing ticket increases year over year in the businesses, but I think you've seen much less in terms of recent price actions by each of the brands in their markets. There's still some labor cost pressures. There's a couple of new increases in Canada on minimum wage. But, overall, I think it's getting a little bit easier on that front. And the key now, after taking some of the price increases that we did last year, is to make sure that we're returning to order count growth, bringing more customers in and day out. We did that really well in our international business in Tim Hortons in Canada. Sequentially, it was improving in the first quarter in both Burger King in the U.S. and Popeyes. And Firehouse was just about flat on traffic, slightly up. So progress there, but I think a lot of the cost pressures are certainly not getting worse anymore.
Meanwhile, the competitive realities here for your industry will always keep you on your toes. You don't shy away from that. Obviously, McDonald's is enjoying a lot of success, particularly with their loyalty program. You have talked since day one of joining Restaurant Brands about the power of the Whopper to the Burger King business. Can you just elaborate on why you think it's such a competitive advantage for you?
Yeah, absolutely. Well, look, it's the best burger in the business. And so, our view is we've got this one asset in the Burger King franchise that is just terrific. I mean, the Whopper is fabulous food, and that is our real competitive advantage. And so the team is doing a very nice job in improving all of the service metrics over the last couple of quarters. And so we're doing a better job taking care of customers, cleaner restaurants, faster service, fewer complaints coming back from our customers, which is kind of ultimately the proof in the pudding. But the Whopper is a real competitive advantage for us. It's something that we've been talking about a lot in our advertising, and it's definitely moving the business the right way.